Hello and welcome to Editor's Take. I have with me Tamal Bandyopadhyay, who is Mint's Deputy Managing Editor and our in-house banking expert. He writes the very popular Bankers Trust column, which just this week quite correctly predicted that the RBI would not touch either its key interest rate or the CRR because of the evolving economic situation. So Tamal, you got it right once again. Why do you think the RBI paused, or rather didn't go in for any interest rate cuts?
Well, if you look at the market, I think 80 or 85% of market was expecting a cut in CRR, and there are few stray instances where Goldman Sachs is one of them looking for a rate cut. But my understanding was there is no reason for definitely not for a rate cut, because you have your wholesale inflation is going down, but you have your retail inflation is pretty high, and it's too early to take a call on that. And again, you mind that these are all provisional figures. I mean, once you have the final figures, it will be pretty higher. So it should at least see one more round. That's the December number. That's the part of. So there is no question of rate cut. And as far as here is concerned, Reserve Bank of India has done OMOs, the bond buying about.
So they have been supporting liquidity.
Supporting liquidity. There is no reason. I mean, yes, because of advance tax outflow, there will be further shortage more than 1 trillion rupees. But you know that this next CRR cut can take effect only on 28th December, because it's the alternate Friday. That's what happened. So by that time the money will come back because government will spend before the quarter end. So there is no reason for a CRR cut.
Yeah. So obviously these days the RBI also gives some forward guidance, and they had already indicated that a rate cut was possible in January, and this time the tone of the policy seems to be even more dovish. They've said that their focus is moving more towards the growth problem than the inflation problem. So do you see significant rate cuts in the coming months, or do you think, because last year the RBI had gone for 50 basis point, suddenly out of turn cut, and there are debates whether this was right or wrong. But what is your analysis that we'll have a rate cut in January and then followed by similarly aggressive cutting?
Well, I think it's fairly certain that we will see a rate cut in January, possibly a combination of rate cut and a cut in CRR, because by the time the last quarter credit will pick up and there will be tightness, and maybe government would like to borrow more, because 5.7 trillion it might exceed by 20,000-30,000 crore, and still some part of government borrowing, I think about 84,000 crore is left. So there will be pressure on liquidity. So I would imagine there will be a combination of rate cut and CRR cut in January, if things are going the way as it has been projected. I would not surprise even if the RBI goes for a 50 basis point rate cut and then wait and watch, because just to give it more emphasis and convince that it is pro growth and force banks to cut their rates. So it can go for an overdose and then it can wait and watch. But overall, will there be over a period of time very aggressive rate cut? Shall we see 1 percentage point or a 1.5 percentage point lesser policy rate? I don't think so. Maybe 50, 75 basis points.
So there'll be baby steps in all probability. Yeah. Today the RBI announced its policy. Yesterday the government, the finance ministry, put out its midterm review, and we've heard a lot about this sort of difference of opinion between the central bank and the finance ministry on various issues. But now, do you think that they are coming to a similar wavelength, that inflation pressures are receding, that the growth issue is a more significant issue? Also, Subbarao used to say that he wants some action from the finance ministry before there's action on his side. So with some action on reforms, fiscal discipline, do you see a more steady relationship, and or more importantly, sort of monetary policy and fiscal policy working in better tandem?
Yeah, more cohesion, I would say, because also you need to understand that the people have changed. You have got a new finance minister, you have got a new advisor in the form of Raghuram Rajan. So what happened since you raised the issue of 50 basis point cut last April, meaning this 2012 April, I think that was done with an understanding that finance ministry would reciprocate and would push for reforms, which never happened. So there was disappointment as far as RBI is concerned. So it's very shaky. It could not trust the government after that. So I think with Chidambaram at the helm, things are changing. Since September, he has started taking decisions, and but mind you, even in October, after doing all these things, RBI still was not convinced. But I think now, since they both Chidambaram and Dr. Manmohan Singh have demonstrating that they are willing to take risk to bring back, to rein in fiscal profligacy and so on and so forth. So I would think that with things will be now better. As you have noticed, Raghuram Rajan did not make any comment. It said that RBI has done what it was expected to do. Yeah. So I think there will be less talk from that side, from Delhi. Lesser number of people will talk on what RBI should do. And there is a sort of understanding, and RBI is getting back its confidence in ministry's actions. So we would see a bit of cohesive action.
Thank you, Tamal. So that was Tamal Bandyopadhyay explaining what lies in store for the money markets and banks in the coming quarters. Essentially, he says that the RBI is likely to start cutting rates in January. And also he expects a slightly more smooth relationship between the RBI and the Finance Ministry. That's it for now. Thank you.